G'day Gain Squad, I am so glad you could join me today at Goldie Gains. Let's jump into it and see where the smart money is flowing today as we navigate a wild week. In this update, we are breaking down the absolute nosedive crash that sent gold prices into a tailspin. We are also exposing some very fishy trades that happened just minutes before Donald Trump's recent big announcement. And we will be checking the technical heat maps to see if the Magnificent Seven are finally losing their grip. Just a quick reminder that this is for entertainment and education, so please chat with a pro before trading. So smart money, here is the big question. Is this the end of the bull run or a golden entry? Tell me your thoughts in the comments, hit that like button, and subscribe to stay ahead of the game. Let's get into it, because the market's having a bit of a wobbler, and the price action is mental. Between March 22nd and March 25th, gold has been on a terrifying freefall. We saw a massive wipeout where gold plunged from $5,400 down to nearly $4,000. This wasn't just a tiny dip, it was a total flushing of the system that took everyone by surprise. On March 23rd, the price hit a scary low of $4,128. That is a 10% drop in a heartbeat, marking the worst weekly decline we have seen in decades. It feels like someone pulled the plug on the bathtub and all the liquidity just drained right out. For us goal getters, watching that level of carnage in real time was a proper test of our trading grit. But don't panic, because even in a crash, we look for the levels where the big players start buying. The market isn't just shaking the tree, it's pulling it out, leaf, root and stem to see which traders have a weak grip on their bags. Now, we have to talk about the institutional sell-off because the big banks were flat out dumping. Large hedge funds were forced to liquidate their paper gold positions to cover losses in other sectors. When the war in the Middle East spiked inflation fears, it actually made the US dollar much stronger. A stronger buck makes gold more expensive for everyone else, which usually triggers a massive wave of selling. These institutions needed cash fast, and since gold is so liquid, it was the first thing they sold. It wasn't because they stopped liking gold, they just had margin calls screaming in their ears all day. We call this a liquidity flush, where the paper market detaches from the value of physical gold bars. It is a brutal cycle, but it is exactly how the market resets before moving on to the next leg. Smart money knows that when the big guys are forced to sell, it often creates a massive opportunity. Let's optimize this entry by understanding that this sell-off is more about mechanics than fundamental value. Speaking of mechanics, did anyone else notice the absolutely wild activity in the oil futures on Monday? Exactly 5 minutes before Donald Trump posted his big update on Truth Social, the volume went vertical. About $1.5 billion worth of SPX futures were bought in one single, giant clip. At the same time, nearly $200 million of oil futures were sold off in an instant. Then Trump announced a 5-day pause in planned strikes against Iranian energy infrastructure, and markets flipped. The timing was so perfect, it has every trader on the forums raising an eyebrow at the screen. Oil prices instantly cratered, with Brent crude falling 14% toward $96 per barrel in minutes. This news sent a shockwave through the commodity pits, pulling gold down along with the energy sector. Whether it was luck or an inside track, someone made a fortune in those 5 minutes before the post. It just goes to show that in 2026, the news cycle is the ultimate weapon for price manipulation. Let's look at WTI crude oil, because it has been a proper roller coaster for anyone in the energy trade. We saw WTI shoot up toward $120 before this sudden retreat back toward the $90 handle. This move was triggered by the 5-day tactical pause in Operation Midnight Hammer strikes against Iranian energy infrastructure. Even with this brief break in hostilities, the supply chains for global energy are still under massive pressure. Some analysts reckon oil could still hit $150 if the Strait of Hormuz isn't permanently secured. The cost of fuel is already hitting Aussie families at the pump, and this sticky inflation is a massive worry. For us traders, the price of oil is the ultimate leading indicator for what the central banks will do next. High energy costs mean interest rates stay high, which is a major headwind for our gold positions. If energy costs stay elevated, interest rates stay high, which is a major headwind for our gold positions. With WTI struggling to hold 90, the chance of a rate cut this year is basically hanging by a thread. This brings us to the OVX Index, which is the fear gauge for the crude oil market right now. The OVX has exploded past 100 points, a level we haven't seen since the pandemic days. In a normal market, this index sits around 25, so a reading of 100 is absolutely mental. It means the market is pricing in 4% swings in the price of oil every single trading day. High volatility like this makes directional bets very dangerous for anyone without a massive bankroll. Many pros are switching to option spreads just to stay in the game without getting wiped out. When the OVX is this high, it tells us that the smart money is hedging for a major explosion. This volatility often spills over into gold, which is why we are seeing those $400 intraday ranges. You've got to keep your positions tight when the OVX is screaming like a banshee in the background. No dramas though, as long as we use proper risk management and don't chase the big green candles. Next up is the US dollar index, or the DXY, which has been the ultimate bully this week. The DXY climbed toward the 100 mark as investors ran for the safety of the greenback. Even with all the chaos in Washington, the world still treats the dollar as the ultimate safe house. Higher Treasury yields are pulling capital into the US, which is like a vacuum for global liquidity. On March 23rd, the index was sitting firm around 99.5, putting massive pressure on gold. As long as the DXY stays elevated, gold will find it very hard to make a sustainable move higher. We are also watching the Aussie dollar pair, which is currently hovering around 0.69. A weaker Aussie dollar is actually a hidden win for us because it boosts the local price of gold. But keep an eye on that US dollar strength. It is the main reason gold is struggling to find its feet. If the DXY breaks above 101, we might need to brace for another leg down in metals. But there is a massive tectonic shift happening under our feet called de-dollarization, and it's getting real. The BRICS nations have officially launched a pilot for their gold-anchored trade tool called the unit. Think of the unit as a digital trade currency where each token is backed by exactly 1 gram of gold. It is a mix of 40% physical gold and 60% of their own local currencies, like the yuan. This is a direct challenge to the dollar-based system that has ruled the world since 1944. These countries now control about half of the world's gold production, and they are tired of US sanctions. They have over 6,000 tons of gold in their vaults, with Russia and China leading the charge. By making gold an active trade asset, they are creating a massive structural floor for the price of bullion. This isn't just a theory anymore. It is a functioning pilot program that could change the global financial order. For long-term gold getters, this is the most bullish news we have seen in our entire trading careers. Even the tech giants of the Magnificent Seven are starting to look a bit shaky in this environment. Microsoft, Nvidia, and Tesla are all underperforming the broader SPX so far in 2026. Earnings growth for these tech titans has slowed down significantly from the 40% highs of last year. Analysts are projecting growth to land around 11%, which is making investors a bit nervous. Microsoft has tumbled about 17%, and Tesla is down 11% as the AI hype cools off. There is a proper rotation happening where money is moving out of software and into hard assets. People are realizing that you can't eat code and you can't use an app to heat your home in a crisis. This shift into commodities is helping to cushion the fall for gold even while tech stocks are bleeding. If the Magnificent Seven continue to stumble, we might see a massive wall of cash looking for a home. We are watching for that pivot where the smart money decides that gold is safer than a tech stock. Over on Reddit and Wall Street Bets, the sentiment has flipped from pure moon missions to total panic. Some traders are calling gold a meme metal and claiming the bubble has finally burst for good. There is a lot of copium in the threads from people who bought the top at 5,500. But some of the sharper traders are pointing out that gold hit 8 green months in a row before this. A correction like this was always on the cards. You can't go vertical forever without a breather. The general vibe is that the retail crowd is scared, which is often a signal for us to pay attention. When people start saying gold is dead, that is usually when the bottom is getting ready to form. We don't trade based on memes, but we definitely use the crowd's fear to help time our own entries. It is all about staying calm while everyone else is losing their lunch over a few red candles on the chart. Remember Gain Squad. The market is a machine designed to transfer money from the impatient to the patient. Let's look at the technicals because the charts are telling a very specific story about this nosedive fall. The RSI on the daily chart has cooled down to 51.4, which is right in the neutral zone. On the 4-hour chart, it actually hit an oversold reading of 22, which triggered that minor bounce. We are also watching a potential death cross as the 50-day average heads toward the 200-day line. Key support is sitting firm at $4,100, which aligns with the 0.382 Fibonacci. Resistance is stacked up at $4,960, and we need to break that to flip bullish. Bollinger Bands are still wide open, so expect more volatility as we search for a new trading range. The MACD has a bearish crossover, so we really need to see some strong volume to confirm a reversal. So, what is the strategy here? Well, we aren't chasing the price, we are waiting for a proper golden entry. I am watching that 4,300 zone very closely for signs of a short-term structure break. If the market holds above 4,100, we could see a technical rebound back toward 5,000. But if that support cracks, then all bets are off, and we might see a deeper dive toward 3,500. The smart move right now is to keep some dry powder and wait for the volatility to settle down a bit. We don't need to catch the absolute bottom. We just need to catch the start of the next sustainable trend. Trading in 2026 is all about discipline and having the stomach to handle these massive swings. This is a proper golden entry for the patient ones who can wait for the market to give them a clear signal. To recap, gold had a historic nosedive crash from over $5,000 down to $4,100. Institutional dumping and a strong US dollar were the main drivers, along with fishy pre-announcement oil trades. WTI oil is still a wild card with extreme volatility, keeping the OVX Index above the 100-point mark. The Magnificent Seven are losing their shine, which is pushing more capital toward the commodities sector. BRICS nations are moving forward with their gold-backed unit currency, a huge long-term win for metals. Technically, gold is neutral but fragile, with 4,100 as the ultimate line in the sand. Sentiment is fearful, but that is exactly when we start looking for where the smart money is flowing. So, gold getters, do you reckon the floor is in, or are we going to see a test of the 3,000 levels? Smash that like button if you found this helpful, and subscribe so you don't miss our next deep dive session. I want to see your price targets in the comments below. Let's get a discussion going on the next big move. Keep your positions tight and gains golden. I'll see you at the next close. Cheers! Stay active, stay legendary. Catch ya!